Hello, this is Callum Keneally, and this is my presentation on the financial crisis of 2008. My financial institution I chose was the Bank of England. Bank of England is the central bank for the United Kingdom and was founded in 1964. They don't serve checking and savings accounts like a commercial bank would. Instead, their sole focus is the financial system of the UK. Some of their responsibilities are setting interest rates to control inflation, issuing banknotes in England and Wales, regulating and supervising financial institutions through the PRA, maintaining financial stability, such as providing liquidity, managing the UK's foreign exchange and gold reserves, and lastly serving as the government's banker and debt manager. The organisational structures: we have the Court of Directors who oversee the operations, the Monetary Policy Committee who set the interest rates, Financial Policy Committee who ensure financial stability, Prudential Regulation Authority who regulate and supervise bank, insurers and investment firms. And then we have the executive team as well who handle the daily operations. Some of the key leaders: we have Andrew Bailey in the bottom right, and then we have David Roberts, who is the chair of the Court of Directors. Role and response: the Bank of England was not directly involved in US mortgages, but it played a key role in managing the fallout. Since they don't act as a commercial bank, they are never issuing mortgages or lending to customers. Some of their response was worked on trying to maintain interest and inflation rates. When the crash began, they used their tools, such as cutting interest rates, which they did from 5% to 0.5. They initiated quantitative easing to get money into the economy. They never benefited from TRP or the Treasury programs, as it was more US focused, but played a role in the global central bank response. For example, offering out US dollar liquidity. They also expanded the balance sheet to stabilise the system. Bank of England never went bankrupt or received any bailout. Central banks typically don't receive bailouts like commercial banks would, and so they still conduct their main responsibilities now. They did make a few changes since the crisis, such as stronger bank oversight, more regulation of banks to prevent risky lending, and stress tests to make sure banks can survive shocks like the 2008 crisis. They expanded financial tools using quantitative easing and provide emergency loans to banks. They also focus on financial stability, more attention to the overall stability of the UK financial system, such as housing market, bank lending and market risks. They also improved crisis preparedness, developed frameworks to respond quickly to a crisis, and better coordination with the UK Treasury and regulators. Also, interest rate adjustments. They continue to set rates to manage inflation and economic growth, learning from past mistakes. Thank you.